Let's discuss different IFRS in finance process. International Financial Reporting Standards, that is IFRS, are a set of accounting standards developed by the International Accounting Standards Board. The IFRS are used by organizations around the world as a basis for financial reporting. In the context of the finance and controlling process, the following are some of the key IFRS that may be relevant. 1. IFRS 9 for financial instruments. This standard provides guidance on how to recognize, measure, and classify financial assets and liabilities, and the determination of expected credit losses. This standard is important for businesses that deal with financial instruments such as stocks, bonds, and derivatives. Key persons involved in this standard include financial analysts, accountants, and senior management. IT customization details may include implementing financial systems that can handle the classification of financial instruments and the measurement of expected credit losses. 2. IFRS 15 for revenue from contracts with customers. This standard provides guidance on how to recognize revenue from contracts with customers, including the principles for determining the transaction price, the timing of revenue recognition, and the disclosure of revenue information. This standard is important for businesses that derive revenue from contracts with customers, such as those in the technology, manufacturing, and service industries. Key persons involved in this standard include sales managers, financial analysts, and accountants. IT customization details may include implementing customer relationship management systems that can handle revenue recognition and disclosure requirements. 3. IFRS 16 for leases. This standard provides guidance on how to account for leases, including the recognition of lease assets and liabilities, the determination of lease payments, and the disclosure of lease information. This standard is important for businesses that lease assets such as real estate, vehicles, and equipment. Key persons involved in this standard include facilities managers, financial analysts, and accountants. IT customization details may include implementing lease accounting software that can handle lease recognition and payment calculations. 4. IFRS 17 for insurance contracts. This standard provides guidance on how to account for insurance contracts, including the recognition of insurance contract liabilities, the measurement of insurance contract liabilities, and the disclosure of insurance contract information. This standard is important for businesses in the insurance industry. Key persons involved in this standard include underwriters, actuaries, and financial analysts. IT customization details may include implementing insurance accounting software that can handle the recognition and measurement of insurance contract liabilities. 5. IFRS 7 for financial instruments disclosures. This standard provides guidance on how to disclose information about financial instruments, including the nature and extent of risks arising from financial instruments, and how those risks are managed. This standard is important for businesses that deal with financial instruments such as stocks, bonds, and derivatives. Key persons involved in this standard include financial analysts, accountants, and senior management. IT customization details may include implementing financial systems that can handle the disclosure requirements for financial instruments. 6. IFRS 10 for consolidated financial statements. This standard provides guidance on how to prepare consolidated financial statements, including the criteria for determining whether an entity is a subsidiary, the elimination of intragroup transactions and balances, and the preparation of consolidated financial statements. This standard is important for businesses that have subsidiaries or are part of a larger corporate structure. Key persons involved in this standard include financial analysts, accountants, and senior management. IT customization details may include implementing financial consolidation software that can handle the elimination of intragroup transactions and balances. These are just a few examples of the IFRS that may be relevant in the FICO process. It is important to note that organizations may be required to comply with different sets of accounting standards depending on their jurisdiction, the nature of their business, and the types of financial instruments they use. In order to comply with IFRS requirements, organizations must have robust financial systems and controls in place, and must ensure that their financial reporting processes are designed to support IFRS requirements. In addition to the IFRS mentioned above, there are many other IFRS that may be relevant in the FICO process, depending on the specific requirements of an organization. For example, some organizations may need to comply with IFRS 3 business combinations, which provides guidance on how to account for business combinations and goodwill, or IFRS 11 joint arrangements, which provides guidance on how to account for joint ventures and joint operations. In order to ensure compliance with IFRS requirements, organizations must have robust financial systems and controls in place, and must ensure that their financial reporting processes are designed to support IFRS requirements. This can include implementing automated financial reporting processes, establishing clear lines of responsibility for financial reporting, and developing appropriate financial reporting policies and procedures. It is also important for organizations to stay up to date with any changes to IFRS requirements, as the IASB regularly updates and revises the IFRS to reflect changes in accounting practices and the needs of organizations. Keeping up to date with these changes and incorporating them into financial reporting processes can help organizations to maintain compliance with IFRS requirements and to produce accurate and reliable financial reports. In conclusion, compliance with IFRS requirements is a critical aspect of the FICO process, and organizations must take appropriate steps to ensure that they are in compliance with the relevant IFRS requirements. This can include implementing robust financial systems and controls, establishing clear lines of responsibility for financial reporting, and staying up to date with changes to IFRS requirements. We really thank you for your time spent on this session. Feel free to meet our partners by sending an inquiry email to contact us at t24global.com. Most of our partners have 15 to 20 years industry experience. So, please get in touch for any quick, managed business process and IT consulting needs.